Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Gold's Indecisive Run Displays Uncertainty and Risk. Gold managed to move higher in the previous daily sessions while it stabilized yesterday, indicating that some traders may have opposing opinions. In general, the precious metals price remains in a sideways run since the start of the previous month, while risks and uncertainty seem to be increasing. First, we make a start with the Chinese coronavirus epidemic, which is currently taking over the financial market headlines, interfering with traders' decisions. Despite the fact that the deceased victims are now over 1,000, Chinese authorities state that the negative impact from the virus could reach its peak later in February, maybe implying through this statement that the worst is yet to come. Also, the epidemic is spreading worldwide, and many other countries have reported infected individuals. At this point, the only country that has been hurt economically is China. As a prolonged New Year's holiday took place in the Chinese mainland, businesses were not able to generate the expected revenues or profits during this period. Thus, some reports state that the Chinese firms that did not operate during the holidays may require extra capital streams in order to survive, while information was also seen regarding some firms that were forced to enact layoffs, in other words, fire people. Fears of an increased unemployment rate as a result of the virus are looming, creating even gloomier outlook on the Chinese economy. However, some positivity also came out from the Chinese news yesterday when it was announced that 2,478 new cases were confirmed, which is lower than the 3,062 estimated in the previous days. The news may have eased gold's uptrend, and any headlines like the pre-mentioned could continue to create short-term trends for the precious metal. In any case, gold is extremely sensitive to economic risk updates, and the matter remains one of the most significant economic uncertainties for the time being. So we would expect the shiny metal to continue to produce volatility on new updates. In addition, for the matter, as long as the economic destabilization in China persists, the risks for the global economy will also increase simultaneously, and possibly impacting global growth in the medium to long term. Due to the fact that the precious metal is denominated in US dollars, we have to keep an eye on the greenback to see if any similar or adverse patterns between the two instruments exist. According to the dollar index, that monitors the greenback's strength against other major currencies, the USD has moved up in the past 6 consecutive daily sessions, while gold dropped in the first 2 and corrected higher in the next 4. Traditionally, gold's price and the USD have an adverse relationship and move opposing each other. Yet, the latest price action indicates the two instruments moved in the same direction in the latest days. Some analysts claim that the USD has been preferred over gold as a safe haven in the previous sessions, after a Federal Reserve official stated that it is comfortable for the time being to keep rates steady. Moving now to our conclusion. We would like to emphasize the importance of some financial releases from the US this week that could prove market movers and create volatility for gold. First, the US inflation data coming up on the 13th of February, while on the 14th we get the retail sales, the industrial production, and the preliminary University of Michigan sentiment, all to be released in the American session. Caution is advised among traders as gold may or may not react to the data. Moving now to our technical analysis. This is gold's 4-hour chart. Now, in the most recent 4-hour sessions, gold price has tested our S1 1567.70 level, but did not break below it, confirming the level's strength. However, in our view, the possible stops below the S1 is first the S2 1554.20 line that was constantly tested in the first days of February, while even lower is the S3 1539.40, which is also imminent and was seen last time back on the 14th of January. In the opposite direction, a move higher could send the precious metal back to the R1 1576.20 level that was tested yesterday and back on the 3rd and 4th of February. Even higher, we could see gold approach the R2 1582.90 level, or even higher the R3 1593 level, both the pre-mentioned lines tested on the 3rd of February. Please note the RSI indicator below our chart is currently running between the 70 and 30 levels after declining from an upward turn, now seemingly stabilizing. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. We will see you soon.